The S&P traded higher today, even though we had a red candle on the daily chart. The S&P, though, was up 0.4%, closing at 6671.06. The gamma exposure concentration at the 6700 strike remains our focus for OPEX week. We actually traded through that level earlier in the day before pulling back. However, we are holding the 50-day EMA, and it's nice to see buyers stepping in during yesterday's trading session and to see that continue during today's session with a higher high and a higher low. And basically, since Friday's big sell-off, all of our trading activity has been within the inside of that range. And so I think that's a big sign that we are seeing a period of consolidation. If we look here on our chart, these dealer cluster zones are fairly close together, not a lot of room in between there, just showing some congestion in the market, a little bit of push-pull between buyers and sellers at these levels. So from our view, things are looking fairly bullish as long as we hold Friday's low, which happens to be just above that 50-day EMA sitting at 65.47.
Let's take a look at IWM. We had been looking for 250 to be tagged on IWM based on the GEX picture that showed this large positive GEX cluster for quite some time. And a couple of times we fell just shy of that 248. And then yesterday we reached 249. We finally tagged that today, and in fact, we surpassed 250 and topped out just below 253. This candle is not necessarily the most bullish candle that we would want to see continuation. What concerns me is that IWM is quite far away from the whole moving average at 245.63. That's this yellow line. You can see some examples in both directions that show when IWM gets too far above or below that line, it tends to consolidate or find its way back to the line again. So the last few times where this happened, we were in a steep uptrend with the whole, and this time we don't have that happening with the whole. The trend has almost flattened out, and so it would take a lot for the line to do the heavy lifting and catch up to price. In my view, combined with the GEX we see at 250, there's higher odds that we see some sort of a pullback, maybe toward the 245 or where we saw a lot of volume today, the 240 mark. So just be aware of that. We do have some positive GEX at 255 and even 260, but I'd like to see the technicals catch up to make that a little bit more likely.
Thanks, Sean. Next, let's take a look at GLD, the gold ETF, up another 1.73% today, closing at 387.39. GLD has been on an absolute tear, especially over the last 4 or 5 trading sessions. At the end of last week, we were down in the low 360s. Now we're all the way up, pushing against the 390 level. Gamma exposure, as you can see, is all skewed to the upside. And we were talking in our live stream earlier this week about how 400 is a possible target here into year end. And it looks like market participants are already making an attempt up at that level. Look at the volume in the options market. Big volume. This is 60, 80,000 contracts, at each of these strikes between 380 and the 400 strike. And if you guys have been watching our YouTube channel for any length of time, you know that we run a GLD weekly income strategy. It's one of the sub threads in our community Discord. So you can actually check that out for free and follow along if you want to take a look. But just yesterday, we locked in $4,980 profit on our short leg of our strategy. This was the October 17th GLD 370 puts that we were short. We actually rolled those up to the 380 puts, and we were also long the October 31st 365 puts and rolled those as well. So we lost approximately $3,680 on the long side of our strategy. And overall in this series, we've been doing really well. Actually, just the previous week, we locked in $2,200 profit, and that was against those October 31st long puts. So all in all, $2,200 plus the $4,980 minus $3,680. That actually puts us right around $3,500 profit in just the past week. And so this diagonal strategy that we've been trading combined with gamma exposure data has been really effective. We've been running this for about the last 5 or 6 months, averaging just over $1,000 a week. And by the way, if you want to track our trades in real time, you can join us by becoming a member at geeksoffinance.com. You can also get a sneak peek of what we're trading in real time by checking out our community Discord. I'll put a link in the description below so you guys can take a look.
Before we move on to some individual tickers, I wanted to stop and take a quick look at the VIX, which continues to be quite volatile day in and day out. And today we actually saw a negative correlation with VVIX, the index measuring the future expected volatility of the VIX being up, while the VIX itself was slightly lower. You can see the VIX bounced almost perfectly off of this rising whole moving average, currently at 1939. So it's holding above this big GEX cluster at 20, and that raises the risk of potentially spiking again up toward 25. Now, today did put in a lower high, so that there's a little bit of something for everybody here and some indecision regarding what happens next. Given that the VIX currently shows positive GEX of over 215 million as of today's close, we have an uptrend that we've been noting since mid-September. I think we have to be cautious here still and give some credit to the idea that this pullback may not be over. In fact, today 25 did see the highest volume. So it's OPEX week. The monthly options expiring. We also have the monthly VIX options expiring a week from today. So we could see some volatility in both directions, and it's a good time to stay on your toes.
Next, let's take a look at Tesla. Tesla up 1.38% today, closing at 435.15. As we've been discussing over the last week, Tesla has been consolidating now for 2 or 3 weeks right between the 425 and 450 zone. Gamma exposure, however, is skewed to the upside. The largest GEX concentration is at that 450 strike, and most of that is in this upcoming October OPEX. So the move today was definitely a step in the right direction. There's big resistance up here around the 450 level. That was a big area where Tesla rejected back during the end of 2024. It's also our upper dealer cluster zone as well. We've mentioned this in a few of our videos recently. We do have an iron butterfly strategy in our portfolio targeting that 450 strikes. We've actually got the 425 and 475 wings, and we're selling the 450 calls and puts. So far, we're in the money and a little bit further upside towards that 450 strike, and that'll make for really nice profits. We'll be looking to lock that in if we do get any kind of further upside move tomorrow closer to that 450 strike. But longer term, bigger picture, looking at Tesla, we're above the 50-day EMA. This gamma exposure at the 500 strike continues to grow. Like if we just look at today, there was nearly 50,000 contracts traded at that 500 strike. So it's way out of the money, and that volume continues to help gamma exposure grow at that 500 strike. So we see this as a potential magnet into year end once this consolidation leg is completed.
Thanks, Anthony. Let's take a look at Reddit, RDDT. Reddit had a big spike over the summer, all the way up to the 280 area into September, and then fell fairly precipitously back to this zone where we've seen consolidation now going on a couple of weeks, right at the 200 area. And as long as we hold above that, which also happens to be above the whole moving average, which is in the early stages of turning, you can see the steep descent in the whole moving average is now curling over and flattening out, and so that's a good sign. And we have this GEX up here at 220 in particular that I'm eyeing. Volume, of course, even higher than that today, all the way up to the 280 mark. But really, the 220 area looks pretty good into November. There's a large GEX cluster there for November 21. We do have some risk to the downside with some negative GEX expiring Friday at 190. But the technical picture, in my view, makes that a little bit lower odds. However, it's good to be aware of the risk. Looks like good risk reward up to 220.
And guys, you can still take advantage of our special promotion, $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We do have a few spots remaining, but this promotion is going to be ending soon, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, and you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies. And you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.